Hi, good evening, everyone, and a warm welcome to our LLF Let's Learn Futures webinar series. We are thrilled to have each of you here with us today. And before we begin, please confirm in the chat box by typing yes or sharing an emoticon if you can hear me clearly, so that I know everything is working well on my side. My mic is working fine, and your speaker is also working well. All right, please type in yes or share an emoticon or type in 111 in the chat box so that I know you are able to hear me clearly. All right, great. Thank you very much, everyone. Now, today's Let's Learn Futures webinar topic is Global Vegetable Oil Market Outlook, a macro outlook beyond palm oil. Now, this LLF webinar series is proudly brought to you by Bursa Malaysia in collaboration with Excellent. I'm Sivaisa, your moderator for today's session. We are privileged to have Ms. Liao Hui Chun joining us to share about the market outlook for global vegetable oils. Now, this session is very unique and especially relevant for those of you who are trading the FCPO, the crude palm oil futures, and FSOI, the Bursa Malaysia DCE soybean oil futures contract. Because beyond analyzing charts and technical indicators, it's crucial for you to understand the fundamental factors that drive price movements. Now, particularly for commodities like crude palm oil and also soybean oil. Now, today's discussion will highlight the key supply and demand drivers, helping you better to interpret the market trends and also improve your trading strategy. So whether you are a seasoned trader or just starting out, there is something insightful takeaways for everyone. I see more people have just joined the webinar room. Welcome. Again, one more last time before we begin, let's do one final sound check. Please type in 222 or yes, or give us a thumbs up in the chat box if you can hear me clearly. And if needed, please also adjust your volume settings to ensure optimal sound quality. All right, thank you very much. Now, to ensure you have the smoothest and highest quality video experience, I highly recommend turning off your video camera during the session, as this will help minimize the internet bandwidth usage, prevent interruptions, and also ensure an optimal learning experience for everyone. And today's session will be divided into two parts. In first part, Hui Chun will present her sharing. Following that, we will be having a Q&A session where you can ask any questions related to today's webinar topic. And to ensure we can address your questions effectively, please type in your question in Slido Q&A box. So where to find your Slido Q&A box is that you can, somewhere along in your device or on your laptop, you can find that somewhere on your webinar panel there is a three dot. So once you click onto it, that you will be able to find a green icon which is labeled as that is actually Slido. Click onto it, then you are able to see that there's a Q&A section that you can type in your questions there. All right, so please note that due to a high volume of message just in the chat box, it may be challenging for me to spot your questions if you don't use the Slido for Q&A. And feel free to type in your questions in Slido box at any time during the session. Now, as this LRF Let's Learn Futures webinar series is brought to you by Bursa Malaysia, we have a lineup of exciting topics ahead to help you deepen your knowledge of futures trading. So every Tuesday, we will host a new webinar topic in this series featuring sessions in Malay, Mandarin, and English. Our panel of speakers and experts will share their valuable knowledge and insights and also practical strategies related to futures trading. We have many content-packed and informative topics that is lined up with more being added regularly. So if you're interested in enhancing your knowledge and skills in futures trading, you can scan this QR code to register, and our admin has also shared the link where you can click onto it and register yourself. And don't forget to add these sessions to your calendar so you don't miss any of them. Now, besides that, we have also got the LLF Let's Learn Futures online workshop. Now, this online workshop is specifically designed for those who are new to futures trading. Now, in this workshop, we cover a full set of beginner's knowledge in futures trading. It's a step-by-step guide to help you kickstart your first futures contract. Each session is 3 hours long. It's a full day class. Now, the upcoming LLF online workshop is next month, June, which will be conducted in English. And the upcoming online workshop will be the following month on July, conducted in Malay. So if you're new to futures trading and would like to learn more, you can register these online workshops. They are entirely free and fully sponsored by Bursa Malaysia. And please note that the attendance is limited to the first 50 online participants only. So be sure to grab your seats quickly. Now, before we begin, it's my pleasure to introduce our speaker for today, Liao Hui-Chun. Now, currently, Hui-Chun is an advisor in GlenOak Economics since 2024, where she brings her expertise in research and analysis in the palm oil markets to GlenOak's oil and oilseed monthly analysis. Formerly, she has spent 23 years with UOB Kay Hian as the Director of Asian Plantation Research. And besides that, Hui-Chun has also presented at numerous conferences, sharing her expertise and market outlooks on listed plantation companies and vegetable oil markets. So without further ado, let me pass this presentation over to Hui-Chun. Hui-Chun, the floor is yours.
Thank you. Thank you, CJ. Hi, good evening, everyone. And thanks, everyone, for taking time to join these sessions. I will now share my slides with you. And can you see my slides?
Yes, your slide is up.
Okay, yes. Okay, I think today's topic is pretty interesting. And you may be questioning like why we are bringing in the global veg oil market into this palm oil market futures, a macro outlook. Because if you notice that actually on the Bursa Malaysia, Bursa Malaysia does offer the soybean oil futures, F-Soy. Okay, so this F-Soy is actually provide the participants to access to the Chinese soybean oil prices, and with this access, you can actually capture the arbitrage opportunity between palm and soybean. So Bursa Malaysia, this DCE soybean oil futures is a future contract licensed by the Dalian's Commodity Exchange, or in short form, we call it DCE. And this DCE is a final settlement price is used based on the calculation of the final settlement price in US dollar. So I think there's a potential for you to trade in this F-Soy because there's a high correlation between the price, the soybean oil prices, and the CPO price. So later I will show you the correlations and how this correlation works. And in terms of the correlation, how you can do an arbitrage between the two contracts. So this will give you a diversification and reduce the risk, and also a good exposure to the global veg oil market trend. So the spreads will the differential between the two oils in certain times will provide you arbitrage and spreading opportunities. I will not go further details into this. Of course, if you want to have more information, there's always the information on Bursa website. There you can actually check out for more information. So as I mentioned, why are we looking at the F-Soy and FCPO? If you look at the prices, these are the major global veg oil prices. And we also have incorporated Brent crude oil spot prices here as well. As you can see, this Brent crude oil price always form a base for the veg oil market. And later I will explain why this veg oil global vegetable oil, or in short, we call it the veg oil market prices, has a high correlation between the price with the crude oil, Brent crude oil spot prices, and among themselves. So if you look at all the prices, they are trend. Most of the veg oil prices are trend similarly, because some of them are interchangeable and substitutable. So the market highly focused on which oil offer the best value at that point of time, and they can trade between the two or the three or the four among the four majors veg oil globally. Okay, so this is why we need to look at trading of F-Soy give you opportunity as well to have arbitrage opportunities and to gain between the two prices. So let me go through some background of this global vegetable oil market. So as a glance, if you look at it, on the supply side of the global veg oil, they actually break down to a couple of types. There's 17 oils and fats globally, but the major ones are made up by the palm oil, soybean oil, rapeseed oil, sunflower oil, peanut oil, palm kernel oil, and coconut oil. So these are the major one. Well, I think why we are only looking at palm and soybean oil, because these two have the largest market shares. So in terms of global supply, you can see palm combining with the palm kernel oil is about 38% of the world market shares, and soybean oil is 29%. So, but if you look at the export market, which is more interesting, as you see, actually palm dominated the export market as for with a 52% market share. So as you're all aware, Malaysia and Indonesia are the two major palm oil producers. Both countries actually contributed close to 87% of global production. Whereas for Malaysia, we export close to 90%, Indonesia exporting about 65% of what they produce. So they make the palm oil the world's largest traded veg oil by type. So it followed by the soybean oil and rapeseed oil. So if you look at the consumptions of the veg oil markets, it's pretty interesting. So most people would think of it, oh, this is a vegetable oil, and most of the oil will be used in the food market. Yes, that's not it. 73% of this consumption of veg oil is actually used for the food consumption, about 73%. But increasingly, we are also seeing that the use of veg oil in biodiesel have increased. This is actually about 23%. Sorry, the numbers have hidden somewhere. So it's about 23% and followed by oleochemicals and other industrial. So in that biodiesel, if you compare like 20 years ago, this wasn't there. Why these prices become more dominant is because of the high crude oil prices at certain stage have encouraged a lot of producing country to venture into biodiesel to make it a mandate to reduce their dependency of the diesel into their country. So we'll go more details into the biodiesel later on. So this is give you an overview of the supplies and the traders and the consumptions of veg oil on the global side. So if you take a closer look on the soybean oil, which I did mention why we are focusing on these two, because these are the two that highly competitive to each other. Okay, if you look at the soybean oil side, right? As I mentioned that in terms of total export, palm oil could be the highest in terms of the export, the major oil export globally, because the others oil seeds, right? Their exports are mostly in the form of seed, not so much on the oil. So that's why, but if you convert the oils in the oil seeds that are being exported out, actually soybean is catching up with palm very closely, because you need to crush the soybean to get the oil. So in all this crushing, you get the oil as well. When you export the soybean, which means that you are also exporting the soybean oil. As a result of that, we have converted that into the oil form. And that is why we say that soybean oil prices and palm is highly correlated, because both of them have seen an increase in terms of export, and they are fighting for the market shares now, because you see the volumes are catching up from the soy side. So, and this also is a very interesting trend that you have to take notes, and that will explain some of the price correlations that we'll see later. And as you can see very clearly, in terms of the palm oil export have reached its peak somewhere in 2018, 2019, and we start to be stagnant and going downwards. Whereas if you look at the soybean side, soybean has been growing very fast and is still growing. And very soon, I think soybean will be on par or overtaking palm oil as the world's largest traded oil, when we incorporated the oils in the seeds export. So this is pretty much a very interesting kind of trends that we observe. So you may have the next question: which are the market we should monitor in terms of soybean? Okay, we know that Malaysia and Indonesia are the two largest palm oil producers. So let's take a look on the soybean market. Okay, if you look at the soybean market, the Americans produce most of the soybean. But if you look at the demand side, it depends highly on China. The Americans, including if you look at the top three largest, which include the North Americans, the USA. Then you have the South Americans, which is you have Argentina and Brazil. So all these combining, you can see they dominated the market. 80% of global soybean produced by these three countries. Okay, but they are not the major user. If you look at the consumer, the consumption side, which are the major, the world soybeans produced, 60% of the world produced soybean actually is imported by China. China require a lot of soybean to be crushed into a soybean mill, and that's this soybean meal which is used as an animal feed for the hog industry. As you know, China's have a very big pork consuming market, so their hog populations are very big, and the soybean meal is a major feed to the hog animal feed. So as a result of that, China need to import a lot of soybean for animal feed, and their imports has been increasing as well. So also that explains why, you know, when the US have a different policy against China, I think China always reiterate the policies on the soybeans import as well. So do take note that China is the largest market for the bean. So after looking at the bean side, let us look at the palm oil side. As you all are aware that, you know, Malaysia, Indonesia, the two largest, and you have the very far third largest producer, which is Thailand, produce about 4%. So this is on the globally for the 2024, you can see global productions is about 79 million metric tons. But if you look at on the consumption side, okay, Indonesia is the largest palm oil producer. At the same time, Indonesia is also the world's largest palm oil consuming country. They are now consume about 24% of the global palm oil productions now. So if you look at it, what drive the Indonesia palm oil consumptions? If you read the recent news, you know, over the last 2-3 years, you can see the one that have been driving the domestic demand for Indonesia's coming from their very aggressive biodiesel mandate. So for their Indonesia, their biodiesel's consumptions is much larger. It's larger than their palm oil used for their food and for their industry. So they have overtaken the usage for the food in 2023, and last year is the second year that the palm oil use for the biodiesel has surpassed the food use in Indonesia. And we have come to the second largest will be India, China, and EU. So this, and coupled with Malaysia, it make up close to 50% of the world consumption. So as to monitor the palm oil price direction, usually these are the few major markets that we have to watch out, and their policy will definitely will have an impact on the price directions as well. So after the two major ones, let's take a quick look on the rapeseed and sunflowers. This is the third and the fourth largest the veg oil consumed globally. So for the rapeseed producing productions country, you can see the major one is Canada, EU, India, and Australia. So of course, in different countries, the rapeseed may call different name. In EU and Australia, it names as rapeseed, but Canada, it also known as canola oil, and India, it also known as mustard oil. So actually, all these refer to the same oil type, which is a rapeseed. So Canada, EU, India, and Australia are the 4 major rapeseed producing countries. But over for the sunflower side, this market is dominated by Russia and Ukraine. If you look at it, both contribute about 54% of the world sunflower seed production. So this is also explained why when the Russia start attacking Ukraine, you know, we can see the sunflowers prices have shoot up and the sunflower oil prices have increased, and that has a spillover impact to other veg oil market as well. It's because although they are small in terms of the total contribution, but you know, without these small oils coming in, you need other oils to replace. So that's why what happened into the sunflower will also affect the others veg oil market as well. So this is a glance of what is happening in the production and supplies and demand for the major veg oil market. So next, if you take a look on the factors to monitor for production. So what is the key factors to monitor? You have to bear in mind that for the oilseed planting, because unlike palm, when oil palm tree planted, the tree will be there for the next 25 years, even the next 30, 35 years if you don't replant it. And the oldest oil palm trees in Malaysia is actually aged about 110 and above. You know, it's about 115 years this year. It still survived, it's still standing there. So, but for our competing oil, some soybean, rapeseed, and sunflowers, these are in the form of annual crops. So they will plant at a different season at the different countries. So once they plant it, you can see we have a different planting seasons. Soybean planting season in US, and it's started now, and it will harvest towards the third quarter, and this will follow by the planting seasons in South America. Okay, and bear in mind that the competing oil, the competing veg oil for palm, which is a soybean oil, rapeseed oil, and sunflower oils, they come in the form of seed first before they are being transformed into the oil by crushing the seed. And for the soybean, they always crush for the meal, not for the oil. Okay, so if you look at the US soybean market, the availability is always towards the late third quarter and fourth quarter of the year, and also into the first, second quarter of the year. And if you look at the rapeseed side, rapeseed in Canada will be in the market. Their planting season start in May, and they will be available in the market in the late third quarter as well. And same goes to the EU and Australia. So each of the different oil seeds have a different planting season and harvesting season. And interestingly, if you look at this table and chart, right? If you look at it, there's always an empty space between July and August, and also early of the year. So sometimes you can see spillover of the Brazil coming in earlier or later. Okay, and if you notice that, you know, this seasonality also play a critical factors for the price movement for palm. So usually we look at it, palm have a very high productions in the quarter, and without any other factors that come into the impact, usually we also see a good third quarter prices, because in the 3Q, the availability of the competing oil is very low. So it's less competing oil. So the market highly dependence on the palm, and palm is a perfect oil during the summer months. A lot of the markets like to use palm oil during the summer months, and the accessibility of market also increased during the summer month. So usually the third quarter you see high production, high prices, without just purely looking at supply and demand. And also coming into the first quarter of the year, where palm is going on the low production cycle, and yet you don't see others veg oil coming into the market as well, and that's also at the time of the very high prices as well. Usually, relatively, the first quarter and the third quarter will have a better pricing, and the pricing pressure always come into the second quarter, where most second quarter and the late third quarter, fourth quarter, where you can see most of the veg oil markets are available in the global market and competing with palm. Okay, so these are the seasonality that we have to watch out when it comes to the analyze the palm oil price direction. So of course, what are the key factors to watch in terms of production? Weather. So we have different weather types. So first of all, we have to monitor the current weather. The current weather that affecting the planting at the current season. As mentioned, each of them have a different planting season. The weather impact, you know, if too dry or too wet, could delay or reduce the planting area. And too wet or too dry during the growing season, the mid-season, will also impact the yield of the oilseeds performance. So weather become very important to monitor during this particular season, second and the third quarter. And that also explains why prices usually have a very high volatility during the second and third quarter of the year. So this is like a day-to-day or week-to-week weather to monitor. And beside that, there are two major weather impact events that we need to monitor as well, which is known as the El Nino and the La Nina climate impact. So the El Nino and the La Nina have a different impact for different hemisphere. So you can see that when come to El Nino, we always say that Malaysia, Indonesia is very dry, it's very hot. That's like what we seen last year, right? Middle of last year, we can see a very dry weather in Malaysia, and in Indonesia is we can see very hot weather in the Kalimantan regions. So but when there is a dry season in Malaysia or Indonesia, Philippines, in Australia, we can see actually it's a very wet weather for the US side and for certain part of the South America. South America, because it's too big, so it actually have two different weather pattern. The northern part of South America will be very similar to us, whereas the southern part of the South America will be very similar to the US weather pattern during the El Nino or La Nina. So El Nino will be bad for palm, but will be good for soybean because there's a very good rainfall for the soybean during their growing stage. They will be very positive for unless it's a too high of the weather. Sorry. Unless the rainfall is too high, then that will have quite a bad impact on the soybean, or else it's positive. Come to La Nina, it's always high rainfall, like what we actually experienced back in November, December, January, February, March this year. Is Malaysia and Indonesia is having this La Nina climate. We have excessive rain and prolonged monsoon season up to the month of March, and in the certain region is up to the early of April. So when we're having a very wet weather over here, you can see that Brazil or Argentina or the US, certain regions are experience dry season, and that actually will impact their production as well. So these are the few major factors that we need to monitor for the production and the supplies of the palm oil and other oilseeds. Okay. So after looking at the production side, so let us move on to the demand. So what are the factors to monitor for demand? So just a very quick glance on the demand for the veg oil market. If you look at the global veg oil consumption since 2000, is the consumption for veg oil, because this is the staple food. You can see the consumption has been growing all the years. I think, except during this COVID years, we see a slight drop or marginal decline in terms of the consumptions, or else you can see it's a one line up. And if you look at the one that is growing very fast lately, since I think we'll say since 2014, 2015, you can see this green line, this light green. You can see from a very small percentage become one of the major one. It's already take or like about 20%, 27%, 25% of the veg oil consumption globally. And also it actually surpassed the others usage, as I mentioned, for the oleochemical and other industry use. So what has been driving the veg oil consumption globally is actually coming from this biofuel side and the biodiesel side. And most of this consumption is come from the government mandated biodiesel program. So we will have a little bit of more details in the subsequent slides. So if you look at it, what drive, what's the actual factor behind this demand? First of all, is on the income. If you look at, see on this capital, GDP per capita side, very obvious, those that tends to have higher GDP per capita, their daily calories intake or their daily, the share of daily calories intake from vegetable oil are higher. So as the income grow higher, the consumptions per capita of veg oil actually grow higher. And this is can see from all the curve here. And that's why markets are highly focused on the up and coming fast developing market. For example, like China, Indonesia, Africa region. These are the upcoming. They are coming from the bottom. As the income grow, you can see their veg oil consumptions or their oils and fat consumption per capita will increase as well. So this is one of the major driver behind the global veg oil demand. Come to the second portion of it, you can see biodiesel, as I mentioned, biodiesel growth actually dominated over the last 10 years. And if you look at the biodiesel market, it's dominated by just a few countries. You have the Europe, the largest, about 26% of the global biodiesel productions, followed by the US, Indonesia, Brazil. You can see clearly from this pie, the major biodiesel producing countries, they are also the major veg oil producing countries. So in a way that we also can conclude that the biodiesel mandate that introduced by all these producing countries is actually in a way also to support their local farmer and also to support the commodity prices as well. So this is the positive trends that we are seeing, as we are seeing that Indonesians are keep increasing their biodiesel because they foresee their productions are coming up. So they have this very strong biodiesel mandate, as today is a B40, which is 40% of their diesel is blended with palm oil, and they are looking to increase it to B50. Indonesia have the highest blending mandate in the world. For the rest of the world, it's range between 7% to about 14-15%. Malaysia, although we have been introducing this biodiesel mandate for years, but the progress are very, very slow. And you can see that we are only contributing to 2% of the global renewable diesel production. Okay. So in terms of others, so let's see on the supply demand outlooks, after we have know the factors that are affecting the production and we're looking at the supply demand side. So what's the outlook like for the major oil seeds and veg oil? So as mentioned, before looking at the veg oil outlook, we have to look at the oil seed for our competing oil, which is the soybean, rapeseed, and sunflower. So if you look at it, this oil seeds production has been growing up and up for 6 consecutive years, and bulk of it actually come from the sunflower or soybean side. Soybean has been going up since 2019-20, and it boosted by larger planted area and also improving yield. Unlike palm, we are seeing a declining or stagnation in terms of our oil yield, but for some soybean, we are seeing their oil use has been increased, and their yield per hectare for soybean also has been rising, and the same happened to the rapeseed as well. So they have been consecutively going on the uptrend, and in terms of the crush volume, because you need to crush before you can produce the oil. If they produce a bean without crushing it, you can't get the oil. So at the same time also, we are looking at the crushing volume is also on the rising trend. So as a result of that, you can look at that, the availability of the competing oil are increasing and is rising. But if you notice that towards the last 2 years, in 2024, 2023, 2024, we start seeing, there is a build up in the oil seeds inventory. So if you look at it clearly, right, you can see the incremental of soybean supply is much faster than the crushing volume. As a result of this trend, you can see there's a build-up in South soybean. So this soybean build-up in soybean oil stock also created a risk to the market. If the soybean oil prices are very good and the crusher can crush the bean for the oil and sell the meal cheaper, and that will encourage them to crush, and suddenly your market from an undersupply kind of veg oil market to oversupply. So we also need to monitor this, the stocks for the oil seeds, and when is the best economic situation for this to be crushed for the oil, not for the mill. So the oil prices have to be very high. Also, that is an indicator for us to monitor on that as well. So this is the scenario that we conclude that there's enough of oil seed supply in the market, and there is an oversupply scenario at this point of time on the oilseed side. We else come to the veg oil market. The veg oil markets experience a different scenario. The growth has been stagnant. If you look at the growth, it's not as fast as the oilseed. And the key contributor is actually, you look at the bottom green bar. The key contributor to this stagnation in the production growth coming from the palm, because palm has not been growing. So as I mentioned, we have a stagnant yield, and we're also losing some areas in Malaysia. So that contributed to the stagnations in terms of the global palm oil productions. So whereas in the consumption, we are seeing a faster growth in terms of consumption. And again, as mentioned, it's actually driven by the palm side and by the biodiesel usage in palm and soybean. As a result of that, the veg oil stocks have declined for 2 consecutive years, and that's explained why you can see the global veg oil price has been very stable and has been staying at an elevated level for quite some times. So these are the dynamic behind the global veg oil supply and demand. So beside this, what are the other factors that contributing to the movement or to the price movement that we need to monitor? I think at this point of time, none other than the government policies. So the government policies has been globally, you can see a lot of flip-flopping, a lot of new policy been introduced, a lot of protective policy has been introduced in the market to protect their own markets. There's a lot of trade barriers and non-trade barriers everywhere. So first of all, the tariff barrier. So you can look at it on the producing country side. You know, we keep seeing a lot of export tax changes in the 2 major producing country, which is the Indonesia and Argentina. And like recently, Indonesia just increased their export duties, and that will change in terms of the price outlook and also the demand and supply dynamic as well. For the import countries, the one that have frequently changed and will have a key factors that determine the price for palm is always come from India. India, sometimes the movement of the taxes are quite drastic as well. So these are the tariff barrier, non-tariff barrier. For example, especially in EU, you have all these non-tariff barrier regarding the deforestation regulation, or they have this renewable energy directive. They have a more stringent requirements on palm against the others. So this is something that non-tariff barriers that we have to monitor. When they're losing a bit, the price outlooks look better. When they tighten, the price outlooks will look a little bit more stressed, because that will affect the demand. So of course, domestic policy, we have an export quota, we have the export control, we have the biodiesel mandate to monitor in this at the producing country, and also I think at the consuming country as well. So I think of these things, I think what could interest the market the most at this point is none other than what's happening in the US. So I just want to spend some time to explain why the US tariff have an impact on the agriculture or the veg oil market. So if you look at the share of the US productions exported, so if you look at it, bulk of it is actually the agriculture. And you have you have the cottons, then you have the sorghum, wheat, soybean. You can see that bulk of the exports are all highly focusing on the agriculture sectors. Okay, so in terms of the US agriculture trade partners, and that explains why there is a very high focus on the key country like China, Mexico, Canada. So if you look at it in terms of US agriculture export destination, it's dominated by Mexico, Canada, and China. In terms of the import origins, it's Mexico and Canada and EU. Okay, so if you look at it, the first targets they have when they introduced this tariff, by Trump's recently these are the 4 major markets they are targeting at: Mexico, Canada, China, and EU. So that explains why when they announced the tariff on these 4 countries, or that's a very big movement in terms of agriculture prices. So if you look at the China shares of US agricultural exports, this is the biggest trump cards that they have in terms of the controlling on from the China side. Is China is a major export market for US sorghum and soybean. Of course, if you look at the share of US soybean in terms of the China import has declined significantly after Trump for the first we call Trump 1.0, when they start have this tariff war with China. So we can see in the early days, 2018, 2017, 18, you can see the moment that Trump's being elected as the president, when they start introducing the tariff here, you can see China, US shares of the China import have declined from like 70% to almost like insignificant. And there is a negotiation in between, and the Trump, that is the commitment from China to increase their soybean. And then lately, before Trump take over the office, or there's a rising trend that Trump will be re-elected, you can see actually China speed up their import of soybean from US. So China now have stocked up a lot of soybean, and now you can see after the tariffs, the second wave of tariff come, China's can actually see very, 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 of course it's off season as well, but very low intake from US. So China can afford not to buy from US, the soybean from US, because Brazil itself produce enough soybean for China. So China no longer feel threatened by the US in terms of soybean supply. Okay. So this is also the other way of looking at it, for the flow, because on the global soybean side, China is the largest. There's the largest importer. So that explains why when US have a change in their taxes, the tariff, the import tariff or the export tariff, that's a very big impact on the agricultural sectors. So after talking about all these factors, let's take a look on the price trend and how this actually affect the price. So I will start off with the soybean prices. So soybean prices are subject to both weather and policy. But of course, in the 2025, when this Trump 2.0 policy come on board, the impacts are much lesser if you compare with Trump 1.0. As mentioned, the US share of the China imports have dropped significantly. So the price impacts have been less. You can see when Trump first imposed the US-China's trade wars, the soybean prices have collapsed. When they have come into the Trump, the phase one agreement, where China commit to import more soybean and corn, there should some recovery in terms of prices, but it doesn't last long. And when you can see when the La Nina hit US and South America, where La Nina, as I mentioned, La Nina will bring heavy rainfall to Earth, but it's very dry in US and the South America. The productions will be affected, the price actually increases. So then, of course, as the next season, when high prices, you encourage more planting. The subsequent season, the price come. But again, the Russia invaded Ukraine in late or early February 2022, have caused the market panic and price shoot up again. So this gives you a sense that how the policy and global geopolitics have affecting the price, and also all the weathers affecting the price. So this is a trend we see on the soybean side. I think if you look at the soybean oil side, because soybean oil and soybean prices can have a little bit of different divergence in terms of trend. If you look at it, this is more volatile because I think highly dependent on the China side and the trade war between the two. That's why you see the volatility is higher, and also the production. But you look at the soybean oil side, right? I think the soybean oil movements will be highly subjective, I think, to the weather, and also I think to the biodiesel news in the US. So when Trump took over the office in his first term, Trump is known as a non-friendly to green energy during his first term. He is more friendlier to the crude oil guys or the mineral oil guys, right? So as a result of that, market think that the US biodiesel policy or renewable diesel will have some hiccup, and he give a lot of favor to the smaller blender. That's caused the soybean prices to be staying very low for a very long time. Until the weather turned back, we are seeing a very low productions from the soybean, and that's indirectly will affect the availability of soybean oil in the market and causes the price to move upwards. Of course, as I mentioned, Russia-Ukraine war will have an impact on the supply side. And I think if you look at it, come to the second terms of the Trump side, the impact are less now. And why the impacts are less now? Because over the years during the Biden term, Biden is known to be friendlier to green energy. So that actually we can see a higher blending, higher production of renewable diesel and also sustainable aviation fuel projects coming up in US. And bulk of these capex are spent by the petrol company. These are the friends of Trump. So when it comes to the second term, because the Trump cannot have very stringent policy against the renewable diesel because bulk of the investment also coming from the mineral oil guy. So we have see less noises like on condemning the renewable or the green fuel, green energy. But he also did not put a very clear cut, and there's a change of the renewable fuel policies in US that create uncertainty, and prices have been up and down due to this policy announcement. So recently we see a positive news coming from US, and suddenly the targets that announced was lower than the market expectation. Price come down again. So for the soybean oil prices, renewable diesel or the biodiesel policy in US is still a very critical factor to watch out. So after looking at the two, when we move back to palm, on the palm oil side, what are the major factors? Again, you can see I put in a lot of highlights here about Indonesia. So Indonesia, this is the first one that I want to highlight is when Indonesia start the news on the B30 move started, and it was a big jump from B20 to B30. Market have a very doubtful on ability of Indonesia carry out this because even Malaysia doing B10, there's so many hurdles. So they doubt that Indonesia can do it. But Indonesia push for that, and Indonesia succeed and roll out the B30, and that push the prices higher. Of course, in between the hiccup and other things that happen, prices have come, but the La Nina happened in Malaysia, and coupled with the disruption during the COVID time has pushed the prices. Coupled with what happened in the US, the La Nina affecting the US soybean production, palm prices have a very good run in 2020 to 2022, 21, and price have been staying quite high. Price have been staying very high above the 3,005 for quite some time since 2021, and this can be explained by my slide just now. As I mentioned, the palm oil supplies has stagnant, and we are seeing the growth are coming up when there's a very bad weather. So it's no longer like market cannot take it like palm is always available in the market. Palm is keep going because there's a lot of planting, but the planting has stopped due to all the very stringent sustainability requirements. We see the new planting stop, and then we see a very slow delay of replanting. Tree have late age, the use drop. So this contributed to a stagnance in terms of production growth. So that actually is a very supportive factors to put a higher floor price for palm. So palm have been staying above the 3,004, like how many years? It's already the fourth consecutive year. And I think markets now are looking at the kind of very supportive at like 3,005 level. So again, key factors to watch out for the palm prices, movement in palm price, always the policy. Indonesia policy have a very, very significant impact on the movement. The moment they say they increase the mandate, the price will go up. The moment they say they increase the taxes, the price will go up. The moment they say they want to increase the domestic the domestic market obligation, where they allocate a certain volume for their domestic market and limit the export, prices will move. So all this movement in Indonesia policy, which is unfortunately is pretty frequent, that actually will affect the price movement and the volatility of the palm prices. Okay, so if you look at all this, right, how do we read all these events? Okay, if you look at, if we're combining the palm oil and the soybean oil, you can see they are highly correlated and movements are very much similar, except, in this is a year that when pump prices collapse, there's a huge supplies coming out. The jump was pushed out by the Indonesia biodiesel, the export ban, and also the Ukraine war, and suddenly when Indonesia uplifted the ban, the prices collapsed, right? So other than that, you can see the movement has been quite in line, quite similar. And if you notice, in the past, palm is always trading at a discount to soybean. This year, we see a parity because palm suffer from a drop in production due to the dryness, the earlier dryness, cost of production come down, and also there is a high usage of the palm in the biodiesel when the palm oil, gas oils. Palm oil was cheaper than the gas oil during the 2008. If you remember, there's a surge in gas oil prices, and that actually helps to support the veg oil market. But if you look at it overall, we have been seeing when palm supply is tight, they trade at parity and slight premium, and they will back into the discount. But as you move on to the recent year, especially after the 2020, as I mentioned, palm oil supplies or palm oil availability of palm oil for export market has hit its peak in 2019. It's at the highest level and start coming off. As when these exports volumes have started to be stagnant and coming off, and productions has not been growing, you can see quite some time palm you do trade at a premium to soybean oil. So how do you look at this? How do you want to make use of these opportunities? So you have to bear in mind, palm will no longer trade at a very big discount. And if you hear about market talking about, palm need to have 300 or back to $200-300 discount to soybean to encourage the market, it will not happen anymore. So as we have seen that, let me remind you of what we are seeing on the very early slides. In terms of the world supplies and demand, you can see this explains why palm trade at a discount, because the growth is like unstoppable, and this partly contributed by the high growth in Indonesia. Okay, and you can see soybean growth was pretty much very slow until like 2010, and when we see the new seed that produced in used in US and Brazil start giving a very high yield, the growth have just exploded. The growth has catch up, and now they are catching up with the palm. So with this kind of trend, it's very hard for us to see palm will trade at the previous big discount to soybean oil to gain the market shares. So this have changed the market dynamic, and this has changed the way how we look at the arbitrage opportunity between the palm and the soybean oil. Okay. So let me move back, sorry. So if you come back to the price trend here. So as mentioned, so how we take the opportunity or the arbitrage opportunity between the two. So I have actually do up this price spread between the Bursa Malaysia 3rd-month contract. This is a Bursa Malaysia 3rd-month CPO contract, BMD 3rd-month contract, versus the US Chicago Board of Trade soybean oil prices. Of course, better if you are using F-Soil to trade, it's better to do a comparison within the DCE Dalian soybean oil price. Unfortunately, I do not have the data with me for that, so I have used the US Seaboard soybean oil price as a proxy. Okay, so if you look at, you can do a similar studies, compare the BMD and the Dalian contract. So what you do is you track out, I take out the spread between the two oil, I plot out the trend, and for the last 25 years, this is the mean. It's about 118, 130 US dollar difference is the mean, the discount, palm discount to soybean. And I work out on that one standard deviation above and below and two standard deviation. And this is the divergence from the norm. So if you look at it, right, whenever there is a divergence from the mean to one standard deviation or even two standard deviation, the price will eventually move back down to the mean. So this is when you do the tracking on the spread between the two oil, that give you an idea, you know, when should you do the arbitrage opportunity, i.e. you want to sell the palm and buy the bean or otherwise, you know. So this will see that whenever there is a big, the spread hit positive one standard deviation or negative one standard deviation, there's a good opportunity for this gap to be reversed back to mean. So this creates the arbitrage opportunity. Of course, the biggest opportunity will come when this is a very excessive move, when you hit a two standard deviation. And we only recently see these trends happen. And you can see, of course, palm have been staying quite a premium to the soybean oil for some times recently because of the tightness of the palm. So the latest one we have seen that since November 2024, palm have a very good run. Palm prices have run ahead of soybean oil, and we see that palm losing market share, demand come off, and now when palm productions are coming off, prices come off, and this is a very good opportunity when the palm was very high and soybean oil does not really move because of the subdued or the uncertainty of the US biodiesel policy. You know, that is a very big gap. And now we are seeing the gap coming off, moving back to the one standard deviation. And will this move it back to the mean? You know, that's we have to see. And a very high chance, as I mentioned here, on the US side, US prices have moved up, and the new policies, you know, if any positive news coming out from the US policy side, we may see a movement on that. So you have to have the spread here to actually help you to look at the both contract. Always remember, you know, monitor the spread between the two prices. Whenever they move above the mean or below the mean, hit one standard deviation, there's always an opportunity to arbitrage between the F-SOI and the FCPO. I think these trends have been quite obvious. You can remember you have to use, because the F-SOI is depending on Thailand exchange, so it's better to use Thailand soybean oil as a benchmark and the DC and the Bursa third month contract as a benchmark, and you look between the two prices. I think with that will be my last slides, and I think I will pass it back to CY.
All right, thank you very much, Hui Chun, for your informative sharing. I'm sure our audience has gained a lot of valuable knowledge and insights about the market outlook for the vegetable oil, and understanding about the fundamental factors that drives the demand and supply for crude palm oil, soybean oil, and also other vegetable oils. Now, before we enter into our Q&A session, if you have any questions related to Hui Chun's presentation, please type in your question in Slido so that I can easily capture and address them. While waiting for questions to come in, I would like to ask a small favor from all of you. Please take a minute to fill out this feedback form, since we have provided an informative session today. It will take you less than a minute to complete. You can find the feedback form link in the chat box, or you can use your mobile phone to scan this QR code. Your feedback is incredibly important to us, as it helps us improve future sessions and ensure we continue deliver high quality content tailored to your learning needs. So please take a quick minute to complete the form, and we'll begin the Q&A session shortly. All right, another 30 seconds to go. All right, a minute has passed. If you have already submitted your feedback, thank you very much. And if you're still completing it, feel free to continue. Now let's move on to the Q&A session. And to ensure we cover as much ground as possible, I will select the most relevant questions from Slido and rephrase them for clarity. And please understand that maybe due to time constraints, we may not be able to address all questions. Now, Hui Chuan, are you ready for the Q&A?
Yes, CJ, I'm ready.
Okay, all right. Now, let's go with the first question. Earlier, you shared about weather impact, right? So, on weather, if comparing El Nino and La Nina, which of these two has a major impact for CPO production?
Okay, I think in terms of the CPO production, definitely El Nino will have more severe impact on the production because oil palm tree is a is a trees that need a lot of water. So when the tree is under stress, they tends to produce less, and the El Nino impacts can drag up to 2 years. So it depends on how long is the dryness, because the palm has to conserve the water and they can actually withstand a dryness for like up to like it can be like more than 8 weeks or more about that. But if you have prolonged dryness beyond the two months and beyond that, especially I think we have a very severe in 2015, and we have like 3-4 months, even like 6 months of very low rainfall. You can see the impacts on palms actually will be have like up to 2 years impact. So the most severe one is like the 1 year, and the second one will be the second year impact, because for palm to produce the fruits we see today, it takes 2 years. From the first cell to become a fruit is a 2 years period. So that's why there's a 2 years impact. Where for La Nina is because of high rainfall. A lot of impacts are very kind of immediate because high rainfall, you cannot harvest, you cannot evacuate your fruits. The impact is milder. So of course, during the rain, you don't see the pollination being done by the weavers, which is a very small insect, right? During rain season, they don't come out to pollinate. You have very low pollination, you see the production drop, but the severity is not as bad as El Nino. So El Nino is still have a major impact on the production for the palm side.
All right, next question. When analyzing FCPO or the CPO export consumption demand, which countries do we need to place emphasis on?
I think if you look back into the slides that I had prepared, right? The 4 major market, the 4 biggest consuming markets, which is Indonesia, the largest producer and the largest consuming country. Second one, you have India, then you followed by China and EU. So these 4 are the major market that you need to monitor. So for each of these market, you have a very different factors to look at it. For example, in Indonesia, as my slide show you in terms of the movement of CPO prices, is highly dependent on Indonesia policy, on their domestic market obligation, where they control the domestic supplies. They want more supplies, they can tighten that, the DMO, increase the DMO and reduce the export. Their policy on biodiesel, their policy on export duty. And whereas on the consuming country is more to monitor their import duties against different veg oil, because different import duty will have an impact the competitiveness of the veg oil. And also you have to look at the non-trade tariff barriers, which is often happen for the EU market. And increasingly, of course, you have to monitor what happened in China, because if China being the largest populated country, if China consumption is not increased, they will reduce the consumptions of veg oil, and that will also impact the market as well, the demand as well. So when China growth have become better, right, you can see there will have a little bit more positive sentiments towards the CPO prices. And this is the 4 major countries that you need to monitor in terms of the consumption side.
Right. Next question. When will Colombia be a significant player of palm oil?
I think it's pretty difficult for Colombia to become if you look at the 4th largest, the 3rd largest producing country, which is Thailand, there's only like 4% of the total. And in terms of production, if you look at it, Indonesia producing close about 49 million tons of CPO. Malaysia, we are between 19 to 19.5. Thailand have increased from the 2 million to about 3.84 million market. So for Colombia, I think Colombia is also producing, I think if I'm not wrong, I need to counter check the number. It could be closer to about 1 or 2 million. So, and for them, they are not a major exporter as well. So for Colombia to play a significant role in that palm, I think it will take times. Even combining the other regions, right? I think it's still very kind of critical factors. It's still back to Malaysia and Indonesia.
All right. Just now earlier you shared about tariff and non-tariff barriers, right? So between these 2 factors, which of them has the most significant impact towards FCPO price movements?
Usually, if you say immediate impact based on the past record, right? Past track record, usually also on the tariff side. So the moment that Indonesia announced or there's a rumors of the Indonesia tax increase, the prices will go up. The moment that India, there's the news on India increasing the import duty, the price will come down. So usually that is the impact, and this is how it works in the past. But of course, lately we have to also take into consideration of the supply as well. If you have changes in taxes, when the supply is too high or supply is too low, the impact will be varies. But definitely, the taxes is always immediate. And in terms of the non-trade barriers, is always at a longer term because it could take a bit on the longer time frame, just like what happened on the proposal of the EUDR, where they actually have this EU non-deforestation requirement for like a trace on palm, right? They need a traceability or a proof or the productions is not from a deforested area. All this is actually a regulatory changes and they take times. So I think this will be something that is how to say a longer time period. The other one that I would say immediate more impact is also come to the ban. Sometimes tax is one, and then if the ban comes from non-tariff barrier, anything related to bans will have a very big immediate impact. So for example, Indonesia, where Indonesia decided to ban the export by the previous president Jokowi, the price immediately shot up. So I think beside the tariff, the ban is the worst that actually will have the most fear by the market.
All right. There is one statement shared by the participant, and the statement, the question is slightly a little bit long. So what they shared is that seems like the supply of crude palm oil is expected to be lower this year. Consider the lower national average oil extraction rate trend from January. However, it is observed that the CPO price keeps decreasing. So was the declining in price influenced by soybean oil price instead?
I will just take a look on the past few months, right? I would say if you look at the MPOB data, it's actually Malaysia side, we have quite a low first quarter production. So the production was low partly because of the high rainfall. If you remember, just now I did mention Malaysia, Indonesia have a very high rainfall from November last year until the March April this year because of the La Nina phenomenon, and that actually reduces the production and supporting the prices. I will say that the reason price down is a bit linked to the recovery of the production. For the month of April, if you look at it, Malaysia production has up about 22% month-on-month. Is a very strong, despite shorter months. I think that could be one of the reasons, when they see a recovery coming up in terms of production. That's why prices will weaken. And bear in mind, as I also mentioned just now, third quarter usually is a peak production quarter for palm. So with a very high April numbers, will this high production continue? I think that is something that we need to wait and see. And I think that could be the reason behind the recent weakness in prices.
All right, there's one question, I think, by a trader. So he says that if I'm trading FCPO, which vegetable oil prices should I monitor? Is it just only soybean oil?
Actually, in the past, it's only more to like soybean oil. But lately, sunflower oils is also becoming another oil to monitor. If you look at it, is it possible to go back to the slide?
Yes, you can share your slides.
I can share my slides, huh? Okay.
Yes.
So I just want to share these slides, right? If you look at the sunflower and rapeseed, right, you can see they are very small oil here. Even their contributions, their traded is very small volume. But what happened is, for the sunflowers, right, the productions have been growing. In the past, right, it's trading at a premium. You look at the sunflower oil, rapeseed oil, right? Sunflower and rapeseed oil, the purple and the lighter and the green here. This is a sunflower oil. It's trading at a premium. You can see it's always at a premium against the others oil. Until after the Black Sea war started, and it become a discount, and it become a noise in the market. And because of the discounted prices, veg oil, as some of the usage, especially for the cooking oil side, is interchangeable, and at this period of time, the sunflower oil is actually capturing a lot of market share from palm and soybean. So at this, especially soybean oil has lose a lot of market share, but palm start losing market share to the sunflower oil during this period. When you can see, it's a bit, the color is a bit, actually palm at certain time is trading above the sunflower oil. And what is the key factors to that is sunflower oils, the two major producer is from Ukraine and Russia, especially from the Ukraine. When they're hit by the war, in the past, Ukraine did keep stocks, right? Their sunflower seed, they keep stock, they don't sell when the prices is low. But during the wartime, they start like selling everything they have, to cash. So they actually releases a lot, and they, because of the needs of the money, they're actually selling at a very low price, and push every single thing out, because if they keep in the inventory, they don't know when this silo or this tank will be hit by Russia. So even same for the Russia side. Russia has been sending a lot of this, out to other country, and I think they also export their sunflower oil out very aggressively, all for the cash, for them to for their cash flow, and also for them to finance during the wartime. So that has actually become another factor to watch out, besides some soybean oil. And fortunately, what happened is, because of the war, and then the planting areas in Ukraine is coming off, the US is coming off, there are less sunflower oils in the market, and then sunflowers prices have moved up back and become a premium oil again. So of course, crude palm oil has been super premium, and that's why we are losing a lot of market share. And that explains when productions are up in April, markets are a bit fear, because we are losing a lot of market share, and yet productions are coming out. We need a low price to gain back our market shares. So I think that's explained the price trend, what happened in the recent price trend.
Okay, there's also another question that's also frequently asked question by traders is that does soybean oil price mainly lead CPO price or the other way around?
Oh, this is an interesting question. There's no fast rules of that. It go back again, like just to share with you all this slide again. It go back to the trend. In the past, because of the palm have a very high growth, we always need soybean oil to lead. And we always say soybean oil is the leading oil, you know. You have to have, how to say, very expensive soybean oil so that people will look at a cheaper alternative. Then they will come back to the palm side. Unfortunately, if you look at it, right, these things have changed, the dynamic have changed. So as palm growth stagnant, and during the time when palm oil availability had dropped, and usually palm will take a lead. And this happened in 2009, and also this happened again in I think it's 2020, 2021, and again it's happened during the recent trends that actually palm have taken lead. You can see palm is taking lead, you know, since I think this was started in August and it hit the peak in November. So this is the time when you see the production was disappointed. Indonesia production was way disappointing the market, and it's come off. And last year, Indonesia production was lower than the previous year. That actually drive the prices up. And at the same time, for the first quarter, both countries suffer for high rainfall, and you can see palm lead. So in the past, if you look at when there's a high production and high inventory, usually soybean will lead the market. So there's no fixed rules who lead who, but usually it go back to the supply demand side. So we had really had to monitor at the particular time or particular quarter, which are the oil leading the market, have a shortage in the market, and that oils that have a shortage will be the leader will be the price leader. So let's go back to the seasonality as well. So come to the second quarters, right? Usually current quarters there's a lot of volatility because you have the planting seasons in US. Good planting, soybean will drop. Bad planting, soybean will up, or same goes to the rapeseed as well. So it's all go back to the seasonality of the planting is also on the supply side. So there's no fixed rule on that.
All right. There is also another question, frequently asked question by traders is that whether are there any differences between soybean oil price in China versus soybean oil price in US?
Actually, there is 3 different benchmark for soybean oil now. In the past, US become the lead, but I think recently because of the US their renewable diesel policy, a lot of soybean oils crushed in US are mainly consumed in US and mostly consumed by the renewable diesel side or their renewable fuel side. So it make a divergence in terms of trend. So US trend and the Argentina, another market to watch is because Argentina is the world largest soybean oil exporter, although they are the third largest soybean producer, they are the world largest soybean oil exporter. And the China soybean oils are all different. They have a local factors that impact the price trend. So US, their renewable diesel, renewable fuel policy is driving their domestic price, and Argentina is more on the global demand and supply. And come to the China side, also depending on the crush. So as I mentioned just now, right, for the bean, right, you need to crush only you get the oil. So if there is a very high demand for animal feed, and it's very profitable for the hog producer to buy more animal feed, right? China will tend to crush more soybean and to get the soybean meal. And when they crush it, they have a byproduct called soybean oil. Then there will be a lot of supply of soybean oil in the market, and that will cause the domestic soybean oil prices to come down. So likewise, if there's less demand for soybean meal, then there will be less crush, and then the availability of soybean oil in China is less, and then that will have actually support the domestic prices. But I think overall, the trend are pretty similar. The divergence usually will be a very short period of time when there's announcement of US renewable fuel standard or there's anything happen in China, there will be some divergence. But ultimately, you can see the trends are pretty much similar. It's just the spread might be different. As I mentioned just now, if you trade between the FCPO and FSOI, the actual price that you should monitor is the DCE, the Dalian soybean oil prices.
All right. One more final question is the US CFTC, which is the Commodities Futures Trading Commission, they do have reported on soybean and soybean oil, the open interest funds position. So which means it's a fund position that the open interest has a strong impact on soybean and soybean oil. So this participant would like to ask whether there is any managed fund reported for palm oil futures or not.
Oh, I don't think there is any reported for BMD side. BMD only report the market participants, but they do not have any data like what US have. US have a very transparent data in terms of the commercial and non-commercial traders for each of the different agriculture futures, but we don't have this data for FCPO. But you have some of this data for Dalian side, but you need to the DC side will have some announcement, but you need to know which are the brokers that handling most of the foreign funds. From the broker position, you will know the participation of the foreign funds in each of the particular contracts traded in China. So you have it in China, you have it in US, but unfortunately for Malaysia, I don't think we have this data available.
All right. One more question, actually from my side. Today, Hui Chen, you have shared plenty and lots of valuable information about the vegetable oils. So, can you summarize and highlight what are the 3 to 5 key factors that traders need to monitor, especially when they trade FCPO and FSOI?
Of course, the price ultimately will back to supply and demand. So the productions, the weather in Malaysia and Indonesia is one of the key factors that you need to monitor to determine on the price side. The policy is another one. And I think on the China side, if you're trading the DCE, I would say the DC, the China economy trends, especially actually when I track the US China soybean market, right? I also tends to track the profitability of the key crop producer. There are quite a few listed, right? I will track their margins, and tracking their margins, you will know whether there will be a good demand for the soybean meal, animal feed or not. And that can give you indications of how is the crushings like in China. So I think all these are the major ones. The weather is one of the major ones. If you want to trade soy and CPO futures, right? I would say you have to become a weatherman. The weather is very main factors, and also you need to study a lot of geopolitics. Geopolitical policies, all this is also another major one that determines that even the fund participations, high or low, they ultimately go back to all these key factors. We see when we also see like a lot of funds that trades on the climate change. They have a climate change fund. All these things are. That's why it's go back to weather and geopolitical. So you have to be a weatherman. You have to be a political analyst as well. If you when you trade the CPO, that is my own opinions.
All right, I don't see any questions in the Slido here. Thank you very much, Hui Chen, for answering our participants' question. Now it's about time to conclude today's webinar session. Now, once again, I would like to take a moment to share with you about our upcoming webinars, especially for those who may have missed the earlier announcement. The LLF Let's Learn Futures webinar series features a wide variety of topics scheduled every Tuesday evening from 8:30 to 10 p.m. We cover a wide range of content-packed and informative topics where you can gain practical knowledge about futures trading from our experienced speakers. So if you're interested in joining any of these sessions, simply scan the QR code to register for the topics that you would like to attend. Once you scan the QR code, you will be directed to a page where you can access our event calendar. And to join our upcoming sessions, all you need to do is to simply navigate to the Tuesday column on the LLF webinar topics section. Click on the session that you are interested in and proceed with your registration accordingly. In addition to our webinars, we also have the LLF online workshop, and these workshops are tailored for those of you who are new to futures market. If you're interested in learning about futures trading in detail, then these online workshops are ideal for you. You can take a picture or screenshot this page and register yourself after this webinar ends. So feel free to share this event with your friends and family who are also interested in futures trading. We'll guide you step by step on how to start trading your first futures contract. And please note that each session is limited to the first 50 online attendees. So be sure to register yourself quickly to secure your seats in both workshops. Once you scan the QR code, you will be directed to a page where you can access our event calendar. To find the LLF online workshop sessions, look for them in the Saturday column. Click on the workshop session that you're interested in and proceed with your registration from there. For those of you who may have not already know, you can also explore a derivatives trading simulator in Bursa Marketplace. This simulator allows you to engage in paper trading so that it will able to help you familiarize yourself in using a futures trading platform. You can register for this free trading experience and give it a try to start developing your interest in futures trading. It's a great way to learn and gain hands-on experience through this trading simulator. Finally, before we conclude this webinar session, allow me to introduce you to Bursa Academy. This is a comprehensive one-stop e-learning platform where you can access all the information and knowledge about stocks, futures, and other products traded on Bursa Malaysia. You can access to Bursa Academy by scanning the QR code on your right or by searching for Bursa Academy on Google to find the link. You can visit this site for more detailed information and resources. It's a valuable resource to enhance your understanding of trading in Bursa Malaysia. All right, we have come to the end of our webinar session for today. Thank you, Hui Chen, for sharing such an informative session with us. And to all of you who joined us, thank you for your participation. We hope you find this webinar both informative and valuable, and I believe you have gained new insights about the market outlook for vegetable oils, and you also have a better understanding about the fundamental factors that drives demand and supply factors in the crude palm oil as well as the soybean oil markets. So with that, I'm CY signing off for now. Enjoy the rest of your day. Have a great evening, and until next time, goodbye.
Thank you, CY. Thank you all.
Thank you, Hui Chen.